Hello and welcome back to the Rekt Capital channel. Welcome to today's video. A historic, momentous event has taken place in terms of the Bitcoin blockchain. We've seen one of the most extreme difficulty adjustments in the protocol. We're seeing that it's already had an impact on Bitcoin hash rate. Bitcoin hash rate is already on the incline. We're seeing a really nice increase. Miners are returning to their mining operations, and you can see that difficulty is on the decrease. Difficulty is adjusting, and of course this is yesterday's data. We're going to have more data as time passes, so in tomorrow's video I'll include a new chart which will probably showcase that this difficulty has dropped a little more than what we're seeing here. But in any case, the difficulty adjustment has occurred, and this is already evident in terms of how long it takes to mine a block. So yesterday we were talking about how we've reached this all-time high region of 12.5 minutes to mine a block, and now we're already seeing curling to the downside, a correction on this time, and we're probably going to see a return to around the average time, so around 10 minutes to mine a block, roughly speaking. So this is a significant event because we're going to see more efficiency in the Bitcoin blockchain. More miners are coming back in because it's profitable once again for miners to be mining Bitcoin, and of course this is going to speed up the network. But we also have to bear in mind that these reversals in the block interval, the amount of time that it takes to mine a block, these reversals also are correlated with reversals and in Bitcoin's price action. So if we just do that over here, you can see that there are reversals. This sort of topping out in the block interval also precedes a reversal. And this is something I spoke about in yesterday's video, but we are probably going to see a reversal in Bitcoin's price action, and that might be to the downside. But having said that, all of these things, difficulty decreasing, hash rate increasing, and the amount of time that it takes to mine a block is actually retracing right now, we're seeing a pickup in miner revenue. So miners are being a little bit more profitable after we saw a very strong depletion in miner revenue over here. So it's nice to see that uptick in terms of the on-chain analytics. And of course, you can check out the description if you'd like to check out these on-chain analytics yourself. Feel free to use the link in the description down below, because a lot of you guys DM me about what I'm using in my videos. So check out the description down below, because it doesn't only concern on-chain analytics but also behavior analysis, like we'll be talking about in a moment. But in any case, back to miner revenue, we're going to be looking at net unrealized profit and losses, and just basically, very simplistically, these green areas showcase to you miner capitulation. This is the red unrealized profit and loss, which just showcases that miners are in a loss, so they are capitulating at this point in these green areas. And of course capitulation is in red, so these are red unrealized profit and losses over here as well, and over here as well. And these green areas I've just put on myself. I'm just showcasing that these are the areas where market cycles begin to form. We see some consolidation in terms of Bitcoin's price action, which is here in black, here as well, and of course here as well. You can see that we see consolidation in Bitcoin's price action at these lows where miners tend to capitulate. And that's quite interesting because we're also seeing capitulation, or at least a brief recovery from this capitulation. So we are in an area of interest, in my opinion. But we also have to pay attention that even though we are in a very attractive area for Bitcoin, we have to pay attention to this higher low. We tend to see higher lows in terms of miner capitulation. Here we see a lower low, but I feel like we might not see a beautiful concoction of extreme events like we've seen on this sell-off in Bitcoin's price action. The fact that we had the plus token sell-off, the fact that we had new fears of a novel epidemic, a new global pandemic like we've never seen before. Coronavirus is something we were just learning about before that 53% crash, but also those cascading liquidations on BitMEX, where BitMEX just showed us that there were around $20 million separating Bitcoin between 3,800 and 0. So all of these extreme events contributed to this cascading sell-off, and it's just a question of, will we be able to replicate that sort of extreme circumstance to see a new bottom for Bitcoin? So just going along with that psychology, I don't think we'll see a new bottom for Bitcoin, but in any case we'll probably see a higher low. So we could see one more major low for Bitcoin, and this would translate quite nicely in terms of minor capitulation as we see in the past, but it will also nicely translate with the fact that we just tend to see a lot of commotion before the halvings. So we tend to see a lot of commotion in terms of unrealized profit and losses for miners. These are the pink areas that just showcase prior to the halving, we tend to see a lot of miners still capitulating a little bit, but this capitulation isn't as strong as at these lows, for instance, or even these lows. But we actually have a hybrid of that. We're actually seeing capitulation prior to the halving, which is definitely in line with history, but we don't see such sharp capitulation prior to history, and we can explain that because we've seen a very extreme, those extreme events that I mentioned previously account for this sort of very strong capitulation in minor activity and unrealized profit and loss. So prior to the halving, this is very much in line with a historical tendency where we see minor capitulation. So that's a very valuable indicator in terms of timing the next major low potentially. But what we also have to bear in mind is the MVRV, something I spoke about in a previous video. So check it out in the top right hand corner if you missed it. This is the video where I just talk about the MVRV and how it can actually predict market cycle bottoms and market cycle tops. But in any case, we're having a higher low over here, right? Here's a higher low, and we also tend to see a higher low over here. So it is a bit of a tendency, higher lows relative to the MVRV. This is essentially the buy zone relative to this indicator. But what I'd like to focus on is that we've seen a rebound from this green area in terms of the MVRV. So I just want to bring this to your attention, that we've also seen a rebound out of this green area, but a retrace back into it to form a higher low again. And I feel like even though we are having a higher low, we could see a return of this MVRV back into the green box, which would tie in with the additional minor capitulation, but not to form a new bottom, but rather to form a new major low, but a higher low nonetheless. And this ties in with this difficulty adjustment. It is a historic event for the Bitcoin blockchain, and it is a bullish event because we are seeing a better efficiency in the Bitcoin blockchain. Miners are coming back for business. They want to mine Bitcoin because it is a profitable business. They want to be contributing to the network. But what we have to bear in mind, as much of a bullish event that this is longer term and over the span of the next few months, we have to bear in mind that this difficulty adjustment, the corrections in difficulty adjustment tend to actually precede sell-offs in Bitcoin's price action. And this over here is a good example of that. One of the most previous sell-offs, end of 2018, beginning of 2019, we actually saw a retracement in the difficulty, this difficulty adjustment, and then we saw consolidation in Bitcoin's price action, but then we actually saw a very strong downtrend. And the same thing goes for this difficulty adjustment right over here. We had that retrace in terms of difficulty, but also it preceded a retrace in Bitcoin's price action. So even though afterwards, of course, we see a increase in Bitcoin's price following a retracement in the difficulty, and over here is the same thing, right? Because when we bottom on difficulty, we see difficulty climb up, and so does Bitcoin's price action. So for the next few months, we tend to see positive price action follow from difficulty adjustments, but in the short term, this difficulty adjustment might very well just give us that major low once again, just to form that higher low. So we're seeing a lot of confluence in terms of what we're analyzing here. We're seeing a lot of confluence in terms of on-chain analytics and different data science models, and here is yet another data science model which gives us further confirmation, or at least confluence, that Bitcoin might be in for a retrace just to register another major low. So we are seeing this 2-year moving average over here, the resistance right over here, but at the same time we could even see topping out prior to then. So if we actually topped out right over here, this would still be in line with the history of what we see in this Bitcoin investor tool. We tend to see wedging price action below the 2-year moving average, which is showcasing to us that this overall is an outsized area of return on investment for any accumulators within this price area for Bitcoin. Something I spoke about in a different video as well, so check it out in the top right hand corner where I talk about all these different tendencies in this data science model. It's a fascinating video. I really enjoyed that research and it is informing my future investing strategy as well. But in any case, we've seen a recent grind up in Bitcoin's price action. The gray chart over here, this gray line is showcasing Bitcoin's price action. So we are seeing a increase in price action relative to the keyword mentions for the word recession. And of course, we are seeing a downtrend. Here's the green line, the keyword search for recession. We are seeing an extended downtrend for the keyword recession, which essentially just shows to us that people are losing interest in the fact that there is a recession on the horizon. And the fact that they're losing interest means that their fear of a recession is no longer extreme like it was over here. So people are becoming less fearful about a recession, and that's thanks to the fact that we've been guaranteed unlimited quantitative easing, unlimited money printing to just save the markets from themselves, essentially speaking. So now people aren't going to be fearful and preoccupied about a recession. We're postponing that recession by printing more money, and that's why we're seeing a decline in search terms for the keyword recession. And Bitcoin's price has been increasing thanks to that, because we've seen an inverse relationship between Bitcoin's price and the keyword search for the keyword recession. And now we're seeing that indeed this inverse relationship is persisting, but the keyword searches are actually going to the downside. And this is the sort of behavior analysis that I like to do. Check out the link in the description down below. There's the website that I use. You can sign up with a free account. It's totally free and it's very easy to use as well. So feel free to go ahead and do that if you'd like. But in any case, even though fears of a recession are going away, we're still seeing signs of a recession. So we're seeing US jobless claims at record levels. Over 3 million jobless claims have occurred, and I understand that this is an anomalous amount, but it also ties in with the anomalous black swan event that we're experiencing, and that's self-quarantining across the globe, essentially speaking. But even though we're seeing a very strong spike, which just showcases how monumental a difference this is relative to the average, essentially, at least the peak high average of the past 50 years in any case. So we are seeing a really strong increase, a anomalous increase in jobless claims, and this is a black swan event, of course. And once we see the coronavirus taper off over the coming months, we'll probably see this level decline as well, but it'll still be a very high amount, and probably it'll still be higher than this average peak of around 700,000 jobless claims. It's probably going to be higher than that anyway. But that just showcases to us that a recession may be postponed by unlimited quantitative easing, money printing, but that doesn't mean that that recession has gone away, and we're seeing these effects in full view with charts like these. But let's talk about the coronavirus for a moment here. Coronavirus mentions have also been decreasing, even though the situation around the world hasn't been improving by any stretch of the imagination. In fact, if we look at today's statistics, the United States of America has now become the leader in terms of total cases for the coronavirus, just topping China right now by 4,000 cases, roughly speaking. Italy is in third place, not too close behind, so it's probably going to exceed China tomorrow. We're seeing how all these different countries still have exponential growth rate curves, and this chart really showcases it properly. China here has an exponential growth rate curve here until it actually tapers off into a logistic curve where we see slowing progress in the new daily confirmed cases of coronavirus, whereas the United States have been, they've pretty much have had a exponential growth rate curve for a while now, since the end of February, and it doesn't look like it's going to be stopping anytime soon. And this intersection point just showcases to us that this is now a change where USA is now the leader for coronavirus cases. And if we look at a few few more exponential growth rate curves. You'll notice that the US is over here in pink, so definitely exponential, but so is Spain here in blue. The UK also has an exponential growth rate curve, and in fact today Boris Johnson, the Prime Minister of the United Kingdom, has been tested positive for the coronavirus. And in any case, we're still seeing these exponential growth rate curves for many different countries. But of course, now the USA is the leader in terms of coronavirus cases, and we've seen new cases in New York double in 5 days. So you're seeing this exponentiality in the hub of the coronavirus breakout. That's essentially where we've seen the most cases in the United States. New York is that hub for coronavirus cases. And the fact that I mention all of these growth rate curves in terms of New York State here over in blue is that we have to think about these growth rate curves and what they could potentially mean going forward. So if we look at Italy, Lombardia in Italy, you can see that this exponential growth rate curve is better than the one we're seeing in Madrid or Catalonia or New York State. So these areas, New York State, Catalonia and Madrid, actually have more exponential growth rate curves than Lombardia. So we have to self-isolate, we have to see more quarantining and just staying at home to just limit the spread of this infection, because it is on a worse growth rate curve than what we saw in Italy, and Italy is struggling right now. It has a lot of pressure on the public healthcare system, which is why China is really trying to help out. Of course, London here in black also has an exponential growth rate curve, but the thing about London is that they aren't testing for new cases, and this is going to be a bit of a anomalous growth rate curve because we're not seeing those new confirmed cases be tested. Everybody just has to stay at home. The Prime Minister has ordered everybody to just stay at home, and that's how the UK are going about combating this virus and just limiting the spread. So London, even though they have a growth rate curve that's exponential, this growth rate curve isn't representative of that. In fact, the growth rate curve is probably going to be very similar to New York's, Catalonia's, or even Madrid's, because a few weeks ago it was following very quickly in the footsteps of the Italian growth rate curve. So this is something to bear in mind when looking at a chart like this. And having said that, that's just about it for today's video. Thanks so much for watching. Please consider dropping a like if you enjoyed the video, and of course subscribe for more videos like this in the future. I'm Rekt Capital, and I'll see you in the next one. Speak soon.